But look, this is what I was saying. You see this thing, and I don't know why my VWAP is blue on this chart, but look, ran up. Look, this is Netflix dumping off the open, found some support, and then just ripped to the upside. And these are 5 minute candles, and then topped out. Look at this, from sub 300. So this thing got down as low as 296 and ran all the way up to 307. So we're talking about 11 points basically. I mean, that's huge. Look at the range on that. So even if, obviously, I don't like to trade directly off the open because I kind of feel like a range isn't put in yet, and it kind of makes me feel like I'm chasing in a way. So I like to give the price action about 10 to 15 minutes to, at least put in some type of range either to the upside or the downside, and a possible direction of the market before I take any trades. So even if you don't trade right off the open, I mean, look, right down here is about, 10 minutes in, 15 minutes in right here, as we find a bottom, put in a higher low, and then cross over VWAP. So, I mean, definitely elevating factors to go ahead and maybe buy the dip for a quick swing to the upside, or even just a scalp, at least up to previous close or the 120. So, if you buy this dip down here or right here, I mean, crossing over VWAP, I mean, chopping around the 9, depending on your size, maybe, take some profits off the table. But if you're still in it, as we're getting up here to the 120, and especially previous close, you got to be at least willing to scale out or, take profits at that point, because the 120 is definitely, 9 times out of 10 going to be some type of level, in this case resistance, and if not the 120, especially previous close. Well, look at that. But see, I'm looking at these levels, and what I'm noticing is fade, run up, and then fade, and they're all topping out or getting to the top of the range, and then fading back down, rejecting, but they are kind of trying to fake out because they all kind of crack VWAP and start consolidating underneath it and then go back up. And that is a setup, by the way, as well. It's a decent setup. You'll see that a lot. You'll see the price action kind of crack VWAP, but consolidate right up underneath it and then cross back over VWAP back to the upside. I've seen that a lot. And then here's the Qs. So you can kind of see it on the Qs as well. Look, all right, so this is pre-market. See, that's one thing that I don't really like about this platform. I'm going to see if there's a way that I can kind of change the background of the chart for pre-market and after hours to a different color, because it's confusing. Or I'm sure I could probably put like a grid line or something, kind of how I have previous close right here. And I think there is one, but it starts all the way at 4 a.m. when pre-market trading starts. You feel me? But look, 9:30 right here. This is the Qs. Dump right off the open. Came down here and found some support. Chopped around for a little bit to the upside, back up to the top of the range. Sold off, came back down, cracked a few indicators. The few indicators that I have, which is the 9, the 120, and VWAP. Obviously, volume. I don't really consider volume an indicator, but I guess it is. I feel like volume shouldn't even be considered an indicator. It should just be mandatory. I mean, if you're trading price action, you feel me? Which I feel is a must. But look, fade, like perfect V shape too, man. Fade, consolidate, back to the upside, top of the range, and fade again, up underneath VWAP, but catching some support, catching a bid down here, and then again, right up underneath VWAP, and then going back up. And that is a setup. I've seen that so many times where you kind of see like a false breakdown, cracking VWAP, and then kind of catching some support underneath VWAP and consolidating, and then crossing back over. Let me go back real quick. So right here is what I'm talking about on the Qs. That's the 5 minute. And I mean, you can even see it on SoxL. And look, SoxL, This is pre-market, but top of the range, fade, consolidation station down here. This is market open right here. A rejection, basically just selling off and washing out right at market open to the downside, but finding some support down here and going back up to the top of the range, topping out, then rejection, fade back down up underneath VWAP, and then back up. But look how this thing was range bound. And that's why it's so important, I feel, to obviously give the price action some time to develop, to show you the range, either, to the upside or the downside. And here's success. That was Soxel. So that's a leveraged semiconductor. And here's success, which is a leveraged semiconductor, but the bearish leveraged. Soxel is a bullish leveraged. So they're basically just the inverse of each other, like the mirror image. But you can see it even on Soxs, but it's just the inverse. So down here at the bottom, coming up, topping out, then fading, then going back up and kind of consolidating above VWAP right here. And then breaking back down. If you go back, the inverse, top of the range, fading, consolidating underneath VWAP, and then going back up. And everything looked kind of like stayed within nice little neat ranges. Look, here's the bottom of the range. Looks like I'm trying to put that level in. Look, 1880s. So yeah, I'm still trying to get used to the platform. So I'm kind of moving slow on it. I know there's got to be a way to like set like your trend lines to a default. But look, 1, 2, 3, and then here's the S&P 500. So and see, this is what I mean. See this line right here and this gap. So this is where the new day starts. But look, right at 9:30, I guess, because the S&P 500, it doesn't, as far as I know, it doesn't really, you don't see any price action on it until market opens. So that's why you can clearly see, like, here's this line right here at 9:30, like the gap. This is, you feel me, the separation between the days. Look, March 20th, and then 9:30 right here, I guess, right here. That's where that starts at. And you could see it on the S&P 500 as well. Obviously, I don't have a VWAP on this chart. And here's the SPY. Market open right here. Look at that. Look at that volume. So now you're talking about about 3 million shares traded right off the open. Well, look, it tried to kind of go up, but they sold into it. But that thing just grinded up, like straight up. Well, actually not straight up, but a nice bullish pattern. Just going up, like putting in some higher lows with some healthy pullbacks. Look, higher low, higher low, higher low, higher low, higher low, rejection. But from here to here is a higher low. So from this low relative to this consolidation is a higher low. So even that can be considered a healthy pullback. Then, more of a bullish pattern, just grinding up, putting in higher lows, got back up to this level right here where you see these wicks, another little rejection, but in actuality, just a healthy pullback because, look, higher low. And this thing didn't even break down the 9 EMA. It just had a healthy pullback and then a continuation to the upside. But ultimately topping out up here. But notice what I said, look, after it topped out and faded, came down here and consolidated up underneath VWAP, and then just continued the bullish, another round of bullishness, and basically like a perfect V shape. Just easy trading conditions as far as I'm concerned. And I'm just watching the price action, watching the SPY.